This is the Sustainability in Fintech panel. As you may have guessed, we unfortunately did lose one guest before coming on stage today. Not down the back of a sofa, that'd be weird. So we're just trying to work out whether this is a mini panel or a super fireside. I'm happy to take votes. Anyway, let us get to it. I'm joined by, on the far side, Steve Round, founder at SaaScada, and also joining me, Hannah Simons, Head of Sustainability at Lloyds Banking Group. A warm welcome to my mini panel or super fireside, please.
Thank you very much.
It's possibly the first time I've had to establish a branding question at the start of the session. Right. I will start in the traditional way, though, and that's just getting 30 seconds from both of you on your role. So, ladies first, Hannah.
Thank you so much, and good afternoon. It's a real pleasure to have the opportunity to speak to you all today. My name is Hannah Simons, and I work at Lloyds Bank. And in my role as Head of Sustainability, I get to do two things. Many of you might have two hats in your existing role as well. So first of all, I'm supporting Lloyds' customers. I sit in our commercial bank, so I'm working with our largest customers on how they embed sustainability both into their business, but also very importantly into their financing. And then secondly, I get to look inward. I do support Lloyds on its own journey to be a more sustainable long-term company.
Thank you very much, Hannah. I had the pleasure of Hannah's company at Sustainability Live a few weeks ago, so it's always a good sign when a guest is happy to come and talk to you again. Either that or she didn't realise I was on my stage. Steve, 30 seconds from you, sir.
Well, I assume I get more time then, given that you already know Hannah. Hi, I'm Steve Round, co-founder at SaaScada. We're a cloud-native core banking platform. But I think just for the purpose of the conversation, I need to give some context. I would say I've got an eclectic career. My mother would have said, I just can't hold down a job. So the context of this debate will be premised around a number of things. One, I chaired the Big Issue for 10 years. Secondly, I chaired Ecology Building Society, which is the most green building society in the country, for 7. I've been non-exec director of Centenary Bank in Uganda, which is a values-based bank dealing primarily with farmers with 3 million customers. I set up the change account for people on low income, in debt and homeless. And SaaScada was built on the basis that we need to create a proper financial services system. And I put the E and S and G together. Just wanted to raise that.
I think that's worth mentioning. If everyone would just be so kind as to peruse their nearest dictionary under the word eclectic, you will find Steve's career as one of those particular areas. Right, let's get to it if we can. And how fintechs are contributing to green finance and the examples you have from your own organisations and own experience. Steve, if I can start with you. Hit me with some examples. Let's start there.
Oh, very, very simply. Let me take Centenary Bank in Uganda. The reality is that whatever you think about banks, and we all love banks, data is the most important thing you can have. And the challenge in Uganda, and I've seen it in the 6 years that I've been there, has been that you have generations of farmers now are actually growing different crops now than they have in generations because of climate change. And the challenge there is, how do you do that as a lender? And we're working with fintechs within Uganda about how they understand the market, how they understand credit, and how we can work as a bank. Because I think the challenge generally is we see fintechs and banks. For me, it's an ecosystem. The reality is, if we want to change the world, and we do, I do, fintechs have a massive role. It's not always competing, though. It's actually working with banks to deliver real good outcomes, because I think fintechs can now deliver data-driven outcomes, which then allow us to make really good decisions as banks. I'll leave it at that for the time being.
And I'm going to come back to that partnership.
I thought you might.
You know how this game works, don't you? Hannah.
So much to pick up on from that, Steve. So I'm going to take my answer in a slightly different way to start with, because I really want to build on some of what you said, and then I will definitely come to the examples, don't worry. But you talked about the sort of transformation and the sort of how fintechs and banks need to coexist. What I would highlight, and of course I would say this because I'm a sustainability professional, I desperately want to leave a healthier planet for my children and for future generations. But actually, why I'm here today is because I truly believe that companies that are well run, that understand changing stakeholder needs, so in the case of your Ugandan farmers, the fact that the crops they used to grow don't grow as well now, so they need to adapt. Companies that can be flexible, adaptable to change. And I use that word change in the broadest sense because the E, the S and the G are the three elements that come together. So it's that intersection, in my view, of environmental, social and community. And nobody has the monopoly on the good ideas that will lead to that success. So what we really need when you're thinking about systems level change is huge amounts of collaboration. You need innovation, you need smaller, more nimble organisations. I am very lucky to be part of Lloyds with 70,000 people. We operate in slightly different ways. Our governance is different. And so actually what you need to achieve transformation is huge amounts of collaboration, both across our industry and then, of course, across the entire ecosystem. And to those examples, though, because I promised I would give you a few, many of you may be aware our own CEO, Charlie Nunn, has talked a lot about the digital transformation that Lloyds is going on. So we ourselves, a very large UK bank, supporting our customers through moving from, again, we were talking about this in the green room earlier, cheques and cash through to fully automated payment systems. So that's one part. To pick up on another reference that Steve made, data is the foundation of everything we do, and of course it really matters in sustainability. So again, how we gather data both to help our customers around sustainability, but also to support us in all of the reporting that we do. So estimating the financed emissions related to all of our lending portfolio, that is actually fueled by ingesting data from a number of incredibly exciting fintech companies. And then, of course, and we'll come to this much later, so I'll just reference it, but it is also enabling us to actually provide finance to very critical technologies that are needed to actually deliver the net zero journey as well.
Well, excuse me. Well, let's stick to that partnership aspect there, because I guarantee we're on session 6 of day 2. If I don't do it now, I'll have forgotten within a couple of questions' time. It's just the reality of it as a host. Let's look at that partnership, Steve, and if you want to carry on picking up on that thread, how do those partnerships work? How are they successful when you're looking to push the sustainability angle in that relationship?
Okay. Let's accept, from my point of view, ESG is a way of working, not a department. Let's accept that for the first thing. Okay. Stats are thrown out, and sorry, I'm a practitioner, not a statistician.
One of those.
Cheap set. The reality is that I'm always told there are 8 billion people in the planet, and there are about 1 billion who don't have access to financial services, or whatever that means. Turn that around, that means that banks, financial institutions have access to 7 billion people. They can make the biggest change in environment and social than any other organisation in the world. Yeah, recycling coffee cups in canteens, love it, fantastic. It's not going to change the world. So, partnerships with fintechs are, when you're doing a loan origination, why are banks not looking at an ESG framework and saying every loan is done under an ESG framework? There are fintechs who can provide that. Whether that's, it doesn't mean that everyone has to be super green. There is a process here. And so we're working with some fintechs as SaaScada as a data-driven core banking platform, because we can provide the data, but when someone borrows money, why not, as part of your credit assessment, your loan origination, you're asking those questions. What impact are you making, both jobs-wise, but also what environmental-wise? And then on your annual review, are you checking that? And if you are, that's an impact. So, and there are fintechs who can do that. And I think a lot of the banks, and I would say that I'm slightly biased on Lloyds because I have a very good friend who I was part of Ecology Building Society, who's part of Lloyds, and I know that she'll be banging every single drum in Lloyds to get them moving.
And you're in elbowing distance as well.
But no, the reality is that it is very difficult in a big bank to get that done. I know that it's a challenge, but there are fintechs out there who can make a real change. And my challenge to the banks, existing legacy banks, is to actually work with fintechs on looking at impact, not only the impact you're making within the community, but how you're lending. And is every loan measured against an ESG framework? And you can do that. There are a load of really good fintechs out there that we work with. So that's what I would say.
I might jump in just to look at how Lloyds has been evolving.
I was being nice to Lloyds, though, don't forget.
You are, but to bring some of that to life. So for every one of our customers in the UK that we have a lending relationship with, we absolutely have an ESG framework. What we find, and we know this is where I think fintech can be transformational, is that if you come to Lloyds, if you go to our competitors, everybody has a slightly different flavour of what they're asking, and even worse, how they're asking it. So that complexity, particularly for SMEs, is enormous. I think if you are a large UK-listed company, you're going to have a sort of whole department responding to these questions.
Yes.
But really, for SMEs, and when you get into microfinance, if the large bank comes along and says, fill out this incredibly long questionnaire so that we can make that ESG assessment, that is really very hard. So finding ways, and this is something that we talk particularly in industry-wide discussions on how do we find a place that the banks, we can all keep our sort of secret sauce, but actually we can make that journey much easier. And to bring in European regulations and then back to the UK, one of the things that I used to love about the European legislation under CSRD, which is obviously currently subject to the EU omnibus conditions, is that actually what it was going to provide was that excellent data layer. Because I started out by saying the foundation of everything we do is high quality data.
Absolutely.
And actually if companies are compelled under CSRD to publish, you are going to get that consistent data in a very transparent way, which was going to enable that. In the absence of that, again, I think what's really valuable and where fintechs are obviously so much further ahead is their ability to gather in what is available out there publicly and present it back in a comparable, transparent way.
Just coming back on that, the challenge for large banks, legacy banks, let's call them, is that they were never set up for data, ever. And that's the reality of life. And they can build on, but the actual core data is problematical. And any bank going forward, if they believe the only relationship they will have with their end customer is transactional, will fail. That's just a fact of life as we move forward. The problem that legacy banks have is how do you get that data through the system to actually help those SMEs and whatever. And for me, I think AI has a real role here. We use AI a lot in our core business in SaaScada, but actually I think we can help when it comes down to credit assessment, when it comes down to loan origination. But I will say this, we deal with lots of banks all around the world. The challenge for banks is how do you actually make that impact and how do you actually measure it? Because I think we can make a big difference and fintechs have a massive role in that.
I think your point about AI, sorry.
No, carry on. I'm actually quite enjoying this.
We're going to fight in a minute, just so you're aware.
There will be something. But on AI, that again is transformative. Yes. We're already seeing it within our own business around how we're able to sort of manage that data load. Again, we can't be on a panel that's got sustainability in the title and then we talk about AI without talking about some of the environmental
absolutely.
Considerations.
Absolutely right.
I was lucky enough to spend New York Climate Week in person, and there was a huge amount of discussion on AI throughout the week. I'm not going to say consensus was reached, but what sort of came across as a very strong message is that, yes, we all know that AI is currently contributing to a growing demand for electricity. So the to power the computers running the technology, they're consuming more and more energy, and we've seen that as examples from certain tech companies saying we won't quite meet the objectives that we've set around emissions reductions. So we know that this growing demand is causing a challenge directly with the emissions targets that the companies are setting. There was certainly a very strong view that in the next sort of 3 to 7 years, AI would help by solving that. So the amount of energy that's needed to create those tokens reducing all the time. The other side is that AI in itself, and again I would broaden that out to fintech, is also creating enormous efficiencies in processes. So actually more emissions needed because we're computing, but then we'll get that more efficient, plus the fact that there's going to be enormous savings for efficiency. So general consensus was that from an emissions perspective, yes, they would be higher, but we'd be resolving that, and that would be okay, and we're switching to renewable energy and maybe small modular reactors. The real issue that everybody didn't have a solution on is water use. And the fact that the data centres that are at the heart of this do require water. So that puts pressure on where we have sort of scarce access to water. Again, there are clever solutions coming, whether that's heating swimming pools with the excess temperature, whether it's growing tomatoes, but there's still that really big concern about all the water that's needed for the coolant systems.
Well, you're right.
But perhaps on the water side, challenge.
I mean, the biggest contributor to climate change is air conditioning. Let's be brutally honest. That's the biggest thing by a massive margin across the whole world. No one's going to turn their air conditioning off. Let's be brutally honest. We've got to find a better way of supporting it.
So again, through New York Climate Week, one of the sessions I attended, they were talking about, perhaps in this was another speaker, not me, that gave the example perhaps in India that you would need to actually set a threshold at how low you could put your air conditioning on. So you could have it on, but you wouldn't be running it at 17 and 18 degrees, and maybe it would be higher, again, because of the energy consumption that would be needed to satisfy that. But
just coming back to the start, the reality is, do I believe that banks, financial institutions and fintechs have a significant role in the E and the S and the G? Yes, I do.
Absolutely.
A significant, and I don't think a lot of financial institutions are taking it as seriously as they could do.
And I'm going to ask one follow-up on all of that before I get on to the actual list of questions I brought
sorry.
with me. Because apparently I
Still
brought
on question one, I think.
and Hannah, this is very much for you, and it's something I don't often do. This is very much a personal question, because I know you are personally very passionate about your work and as a practitioner. Do you feel a lot of personal responsibility for the amount of influence you have at Lloyds, knocking on to all the customers that Steve was mentioning at the start? Personally, as a professional and a human being who's passionate about this, is there a degree of pressure and responsibility you feel?
Absolutely, yes. And I think if you ask any sustainability professional, they feel that immense responsibility. What I would highlight, and as we think about some of the pressures that we're seeing at the moment from the ESG backlash, when I come into my day job, though, what I try to do is put away some of those very personal views and get it back to business. Like, how do we drive business growth? How do we drive risk management? There's risk and opportunity that comes along with sustainability. So if we can help you grow your top line by product innovation, by development, if we can manage those risks more effectively, you as a business are more resilient and therefore more likely to remain profitable in the long run. That also is actually a really, really strong positive outcome, because when we go into the S side, that means you are hiring in your community, you are supporting your wider stakeholders. So then the personal bit can come back in. But yeah, I have to be really laser focused in what we're talking about is how to make companies really relevant in the future.
Can I just come back to your ESG backlash? As part of the Global Alliance on Banking on Values, we have about 25 community banks from the States, and at least 10 of those cannot use the phrase ESG, because that would just they're just not allowed to use it. They cannot do that, and it is a backlash. it's struck in my mind. The Global Alliance of Bank and Values was set up some 20 years ago, and it is literally banks who believe you can drive profits and customer service and products through being values-based. And we had a big debate 2 years ago about greenwashing. And we're all, oh, it's terrible, absolutely appalling. And one of the founders of the Global Alliance, Thomas from GLS Bank in Germany, said, stop. When we started the Global Alliance 20 years ago, none of the big banks felt the environment was an issue, therefore they weren't going to get involved. If they're starting to greenwash, they now understand that their customers are looking at that. Our job now is to get them to actually really deliver on it. And I think those are the changing things. Yeah, we were talking before, banking, it's grey. I'm sorry, it is really grey. I'll give you an example when I chaired Ecology Building Society. You know, we had a big campaign, move your money out of the big banks and get it into really right-on green banks. And I went to see the chief exec, because Ecology Building Society, we had all this money coming in. And she said, oh, I bet you're really pleased. I went, got a bit of a problem with it. Well, why have you got a problem with it? I said, well, you've got all this money. We don't give it out, we lend it out. So it takes us a bit more time to lend it out. And every loan we do has an environmental benefit to it. So it takes even longer. What do you think we do with the money? What do you mean? Well, what do you think we do with the deposits we've got in? We have to get returns. So in this day and age, you have to use technically the Bank of England, but also a very limited set of counterparties, who are all the major banks. So our money was back out. And this is the challenge. Yeah, I hate to support big banks, but no, the reality is that it is a challenge. But what I'm looking for from the banks, and I know Lloyds are doing it, but others aren't, is what are you doing, not just recycling, I know I keep calling recycling coffee cups, not planting trees, great, lovely. What are you doing with your core processes? You know, I was at a conversation or a meeting 3 or 4 weeks ago, and said, well, we've got 2 green products. I go, oh, jolly good, great, fantastic, move on. You know, what are you doing? You know, because every product you can do can have. And the change that we could make from job creation, from social impact, and from the environment is phenomenal. You know, every house that you can actually get a mortgage on that actually has better support, has better electricity, has, you know, not passive house, but, you know, where it gets, is saving people money as well. Sorry. I'm not passionate at all, move on.
But I think
no, you could really put your back into it next time. That'd be lovely. Sorry Hannah.
Did you want to ask?
If you are on a roll, I'm going to let you roll with it.
Sorry.
So to the point on grey, and I think you always need to lean into some of the more difficult areas. So as you know, a large bank is set up to service the entire community and the full breadth of sort of products and services, and therefore every industry. What I think the banking industry is doing really well is recognising that we might even call it the sort of brown exists, but that it's how do we support those customers in moving from brown to green. I call it transition. I think green should be reserved for those things. So again, renewable energy, absolutely green, but thinking about, you know, how do you take an oil and gas major today on that journey to be a green company? And we as a bank and as part of the banking industry play a very critical role in that. We absolutely have to make sure that we're able to support that innovation where it is truly green immediately. That's critical, and we've got plenty of examples. So Lloyds was one of the very first UK banks to be involved, and we've been involved throughout the entire journey on offshore wind, on solar farms. That's really exciting. But we also do play a very critical role in supporting those companies. Now, when you are supporting those companies that today sit in that sort of high emitting, harder to abate area, it is critical though to understand the pathway they're on. This isn't just saying everyone is, you know, there today. It's really about understanding, do the companies themselves have a plan to move them to a more sustainable future? And again, I highlight that sustainable future is one that will actually secure their long-term future. So we have to be very careful. There are stranded assets. You know, if companies are sitting with sort of huge amounts of sort of oil inventory, and we do transition quickly, what are they going to be able to do with those oil fields? So we have to be really mindful as we go through that process. But it's about finding the balance. It is absolutely leaning into what's green today. Lloyds and many other banks will have targets to specifically allocate to those green capital. And then it's about demonstrating again to our regulator, to our customers, to the wider community on how we're supporting those companies that need to transition.
And we have to be realistic. You have to incentivize people. Yeah. I mean, that's the reality of life. You know, even at a college building society, you know, you move your boiler from a D to an A, you get a discount on your mortgage. Yeah. That's incentivizing. You know, and I think that's the reality of life. That no one's expecting banks to suddenly go, you know, and the challenge that I do see, and fintechs can really support this in a way that, does everyone care about the planet? Well, some people do. Some people actually don't. That's the reality of life. You know, I deal with a lot of people on low income, you know, and they will buy the cheapest stuff they can possibly do. That's a fact of life again. But if we can create a banking system that uses fintechs, and you know, I will push SaaScada. You know, we can provide the data where people are spending their money, how they're spending it, what you could spend it on differently. Can you move it into a green? Yeah, and I think, when you start to communicate with that, you can do it. But it's a cultural change. And culture takes a long time. And yes, we see it in the UK where I get my blue bin, my green bin and my brown bin. You know, in Uganda I see people starving because they can't grow the right crops because the rains are too much or it's too sunny in the south. And most of us don't see those, to be fair, you know, and we don't. So I think fintechs working with banks have a role. I think I would like to see more of an ecosystem working, because I think ecosystems do work. Banks not competing with fintechs. You know, everyone goes, Monzo, Revolut, they're fantastic. Yeah, they are. Can't argue with that. But the banks have now started to move to better customer relationship, better IT, better apps. But also, we can do that on social impact, and we can do it on environmental stuff as well. I believe that.
Right, I'm going to try and get on some of the questions I have planned, because I was actually thinking about just moving on to the front row and leaving you guys to carry on. You know, it's fantastic stuff. Let's talk green bonds if we can. Let's try and broaden the conversation a little bit more. They're helping to fund more sustainable futures. We know this. How are they becoming more efficient with the help of new technology? And I know, Hannah, this is something we've spoken about before, so I'll let you kick off on this, because it is a big part of this jigsaw for me.
Yeah, so this is one of the areas that I personally am responsible for. So whenever one of our customers brings a green bond to market, it will have been through my team, so we will be there understanding how they're going to use the money from the green bond. So the company is raising that debt. They will be using that debt for very specific purposes that they will have set out in what they call a sustainable finance framework. So that could be, for instance, providing, if it's a financial services company, lending to affordable housing. It could be, sorry to use the same example, but renewable energy. It could be more sustainable transportation. So you will have set out all of that information. Where I think fintech can be brilliant is that once you've issued your bond, and green bonds, just to give you some of the data, over the past few years, the sustainable bond market has grown considerably. During last year, we hit sort of 5 trillion of issuance. There's been about 1 trillion of issuance for the past few years, running a little bit behind that this year. I think that's more about actually the economic backdrop than a position on sustainable finance. But so it's a very popular way and a really helpful mechanism within the structuring approach. Green bonds have been the biggest part of the sustainable bond market. But once you've issued your bond, you have to do an awful lot of reporting. It's called impact reporting. This is where I think fintech can be brilliant. And in fact, again, when I think about Lloyds, who is an issuer of green bonds, you need to gather up all of your data to demonstrate that the money has been put to use in those specific areas, but then you'll have identified impact metrics. And again, this is all about gathering that data. So then you're going to need to report on what has been the impact of having that bonds. So for example, one of the things that we do in our own reporting is look at the emissions saved because we've offered lending to electric vehicles rather than the traditional combustion engine. So you need all of that data layer, and that again is where even a large bank like us, we're using Fintech to help us gather all of that data to make it a much more efficient calculation. Because that burden, again, if you talk to treasury teams, if you talk to the finance teams, one of the really big considerations when you're thinking about issuing sustainably labelled debt is how am I going to do that reporting? That's an extra burden. Now, there's something called the greenium. So Steve talked about this idea that you need to incentivize people. In the past, often when people issued labelled debt, it was cheaper. So the interest rate they had to pay back to the market was less. Over the last few years, that's been eroded, and you can't always see the greenium. So I get pushback all the time from the central team saying, but Hannah, you're telling me it's no cheaper. And now in your next breath, you're telling me about all this reporting burden that you need to do. And so any way that we can make that more efficient is going to be very, very supportive of continuing what I think, and I've highlighted, is a really critical part of the sort of financing system for an individual company.
Thank you. Steve?
Oh, this is where we're going to fall out. Oh. No, we're not. No, we're not going to fall out.
We were doing so well.
We were. I go back to the point. The reality is, do I think green bonds in the sense, do they work to a point? I still believe that every bond should have some framework and the reporting is immense. But the reality is that it could be a sticking plaster. I'm not against them. I'm not against anything that starts to change the way we look at things. I'll give you an example. I used to go to a conference in the US which brought investors into funding really great projects. There were about 600 delegates there, and you'd have all the big investors there, and they were 300 investors, 300 projects. You go 2 years later, there were 600 delegates there, there are 200 investors, 200 projects and 200 impact assessors. And that's the challenge, and there's a career made out of measuring impact, and I agree, AI and whatever. And that's the challenge, because when you're going up, and I understand that, up within the infrastructure, to say, well, we should be doing this, and they go, well, all this bloody reporting, what we do. For me, reporting is really important. Oh. Yeah, we do, banks report everything all the time. I've been on 5 bank boards. Yeah, I know, it's a pain in the arse, excuse my French, but it is. And actually, most of the reporting is made up. I don't mean made up as in rubbish. It's made up because the data isn't totally accessible all the time. I don't mean made up. But it is, and it's from different sources. If we want to make a real difference, bonds, investments, deposits, I want to see a world where, and technology can do this, where we have clients who use our core we can tell you the weather when that transaction was made. Now, whether that's any use to that, it is immaterial. You can get to this hyper-personalisation, which is where we're at, because people like to, I grew up as a very old man here, where personal loans used to send out in the post, and it had a picture of a yacht, a car, a holiday, and a kitchen, and say, would you want some more money? Now it's, they know what I do. I don't get the yacht anymore, I have to tell you. But the reality is that fintechs working with banks can really hyper-personalise and actually take people down a route. And I think bonds themselves have a role, but it's how you develop that into the more bond market, in my opinion. It's a start.
I think, did you want to respond at all to any of that, Hannah?
I think on the it's a start point, it's a really critical piece. And interestingly, if you talk to repeat investors, they can sometimes feel a little bit upset because people don't ask them a lot of sustainability questions anymore. But it is in part because they have been so transparent over years. So it's obviously often the new issuers coming to market where there's lots of questions. But for many investors will therefore say, but that company is so truly sustainable because its narrative changed many years ago. It's the start. It's a very, very important start.
Don't disagree.
And I don't see that market, disappearing anytime soon, because it is a really, really positive way of signalling to your employees, to your customers, to regulators of the journey you're on.
I suppose my issue is it separates it out from the normal core of business. It's like having a head of CSR. The reality is CSR is part of what you do as a business now. It has to be. ESG is part of what you do as a business. So having a head of it, I understand from an operational point of view, but it's got to be at the core of the business. And I think that I would say that ESG, whether you like, and whether Mr. Trump are not being political, because I know he doesn't like it, but every business has to look at that.
That isn't breaking news, I don't think.
but every business has to have it at their core. And to do that, you have to be able to report on it. And the data that you have in a banking system is generally rubbish, because it was never set up to do that. So your analysts trying to do, and the workload. So I think, from an operational, we've just done some research at SaaScada, where AI is being used in banks, and operationally it's really low. Yes, they're doing it to the end customer because the end customer wants to see all this, but it's the operational thing that will change banking.
Time is rapidly running away from us. There's plenty more I would want to go through, as you could probably guess, because I've barely touched the questions I had listed. Are there any questions from the room before I return to my list? Yes, we do. I will jump over here.
Hello, thank you so much. I was wondering if you have any favorite companies, they could be in financial services or not, that you really think are integrating ESG into their products and services, and perhaps using their core business to serve the community. So for instance, with financial services, providing financial literacy as an example versus something that's kind of tangential to the core focus of the business.
Good question. I would like to say yes, 100%. I don't think it's 100% there in any business, actually. And let me give you an example of Ecology Building Society. Ecology Building Society was set up in 1983 by 500 nutters, green nutters. That's what we call them. They weren't. They all put £1,000 in and set Ecology Building Society up. And the concept was to build a greener society. So every loan has always had an environmental benefit. However, have we measured since 1983 that impact and that assessment and the real delivery over those years? No, we haven't. So I think, and that's changing, because in fact a lot of people are pinching the ecology clothes and saying we're doing this, that, and that, and yet ecology have been doing it properly, but they never measured the impact. So do I think some of the newer ones coming in are, you look at Triodos Bank is probably the most famous. Less so in the UK, but definitely in the Netherlands, where they changed the tax system and everything. So I go back to my point. Any financial services company lives in a grey world-ish.
And then, if I might just switch out of banking for a moment, because we've had some really great examples. There is an organisation in the asset management community, I'm just going to pick on one, but Generation Investment Management. They only invest in sort of sustainable funds, so every one of their funds that they offer to customers would have a sustainability angle embedded into it. That could either be a very specific climate ambition or a broader finding those companies that are sustainable. And that was the foundation of that organisation. That is the sort of coming together of David Blood, who is ex-Goldman Sachs, and Al Gore. And many years ago, I had the opportunity to hear directly from them. And the person opening the session for them sort of stole their opening line, which was much to their upset, because they talked about the alternative name to Generation being Blood and Gore, which I thought was very interesting, given that they have this very specific focus. But they have been, again, as a US company, able to weather this storm around, or the continuing storm that we see, around the role that sustainable investing plays in the full spectrum of sustainability.
I would say from a host point of view that if you passed up the opportunity to introduce them as that, you are not doing your job correctly.
Exactly.
Any further questions from the room at all? That's strikes me as a no. So I will return to my list of questions. There's a couple more I wanted just to cover off in the last 5 minutes. That's really optimistic. One more we'll try and cover off in the last 5 minutes. And that is a very broad future outlook question. And for you, the biggest opportunity there is going forward between fintechs, more traditional banking, legacy organisations. What is the big opportunity going forward where's the most headroom, I suppose, for progress? Hannah, I'll start with you.
Well, I think I'm going to actually maybe steal something that Steve talked about, because I think it fits in really neatly with... sorry, but now you're going to have to rethink your answer.
I will.
But it really comes back to that data layer and then the hyper-personalisation. Yeah. And that, I think, is the ability to transform. So to making... without the data layer, we can't make well-informed decisions, and we also can't process quicker and much more efficiently. So that goes beyond, it's just simple and straightforward. But I think leaning into, and this is where I'm stealing your bit, the ability to then move fast by that personalisation. Yes. And that comes on every level, because it is about us as individuals, but it's also then about really how you can be laser focused as you talk to a very large customer of our bank to really understand how their business is needing to adapt. I saw some great examples again when I was in New York Climate Week of some of the physical risk analysis and the data that's available on sort of flooding and potential floodplains and flood risk. There was a depressing moment when somebody was showing some of the imagery around the Californian wildfires as well. So again, your ability to take that data and be really quick with it, I think, is incredible. And when you go back to the E, the S and the G, if we really understood today, so when we think about pricing premiums for insurance, we talk about the price of insurance over the next year. Those insurers have incredible data on how the longer term trends will impact the value of an asset, but it's not directly involved in the pricing for this year and next year. So we need to find ways to bring all of that together, and that hyper-personalisation, I think, is going to be incredible. Thank you.
Steve.
Sorry.
What Hannah said. No,
I'm sure you'll think of something to say. I've got a feeling.
No. I agree with everything, and I think it's a spot on. What I would say, and I'm going to use the African example. In Africa particularly, less so in the UK, we talked about this before, that I think that the reality is that in 2011, 12, 13, 14, fintechs were seen as a competitor to the large banks. They were going to take all the banking over. It hasn't happened and won't happen, because banks have reacted, and they're now working more closely together to get better loan origination, KYC, impact assessment. What you see in Africa, and we're looking at a big set of Africa, there's still that competitive element where banks want to create their own infrastructure, and the mobile network operators, which are massive out there, and we all know about M-Pesa in Kenya and the like. So it's more about how you work together to create that hyper-personalisation, because the reality is that going forward, the challenges for individuals are going to get harder, and they are in certain parts of this world. And banks, I come back to banks, financial institutions, I still feel that they underestimate their importance to how they can change this whole climate and social risk. I believe that they, and I know it's difficult, and I'm sure at certain parts in every bank they're thinking about it, but they have to, they really are. They have access to more people than anything in the world, and they can do something. And I would like to see more interaction. I'd like to see more professionals like Hannah in banks around the world really driving the force to change the way we operate with fintechs and saying, well, that's a great fintech, let's plug that in, because that's going to help our customers. So cooperation and ecosystem, plus all the other stuff.
Well, that has led us back perfectly to where we began, I think, when we were talking about partnerships. I often at this situation say I've not scratched the surface of the questions I was going to ask. I can't even see the surface to scratch it in terms of the questions I was going to ask. I would urge everyone in the room just to hang on for one final session after this. We'll be closing the show with Vibhor Narang from Standard Chartered. That's a keynote coming up at the end of this panel. But I'd like to say for everyone in the room here, it's been an incredible conversation. You've been so candid, so honest, so open about this whole discussion. Thank you to Hannah and to Steve.
Thank you. Thank you so much. Thank you. Thank you.